We'll start down at the far end.
Hello.
Can we do a 2-minute introduction, please, and just explain your position and role within the sector?
Yeah, I'm John Benger from Altnets. We are a procurement consultant. We are ISPA's procurement consultant partner. We were set up in 2020 specifically to deliver experienced skill sets and procurement advice to a fibre industry rather than some of our peers that have been working in the sort of copper delivery for a long time. So we're not just a procurement partner, we do logistics, full supply chain, sort of health check stuff, and we've got a heavy focus on ESG, so like the BD UK funding type ESG stuff. So yeah, we've got a number of sort of our customers are actually in the ring today.
Thank you.
I'm Dan Black. I'm Commercial Director for Northern Europe at VIAVI Solutions. We are a leading test and measurement and equipment supplier. Within the UK, we provide everything from handheld testers, fibre cleaners, right through to full centralised systems for fibre test and Ethernet test, helping operators get it right first time and helping contractors get in, get out and get paid.
Thank you. Jayne?
Hi all, Jayne Longstaff, Vice President for Macquarie Capital from our Principal Infrastructure Investment arm. I work with Oliver Bradley, who I'm sure many of you in the room are familiar with. So great to be here today. Thanks.
Rajesh?
Rajesh, Sennik, delighted to be here. I must say I love digital infrastructure. It's such a key lever for social and economic development. I lead KPMG's TMT value creation business, been working in the sector for many, many years. KPMG is quite active in this sector. We've worked with some of amazing companies like City Fibre, Community Fibre, etc. Really looking forward to this session. I've got quite a few colleagues here as well with me today.
And James?
Good morning, I'm James Harraway. I work for Infracapital, which is the infrastructure investment part of M&G. We've been around for about 20 years. We've been investing in telecoms infrastructure for about 10 years. We've made 4 investments in fibre to the home businesses in the UK, and we've also got similar businesses in Germany, Poland and Austria. We also own a 50% stake in Neos Networks, the wholesale B2B nationwide business here.
Thank you. So we're here today, guys, to talk about the investment landscape, the potential for M&A within that landscape, consolidation. If you look at some of the headlines that have been hitting the press recently, you've got allegedly ongoing discussions between City Fibre and somebody else to talk about a merger at the top end of the market. My view a year ago was that consolidation will start at the bottom and work its way up the chain. Maybe it's going to be the other way around. If you look at what Octopus Firm are doing, they've mashed together in a structured way. Mashed is probably not the right word, but they've put together the 4 entities that they've got strong ownership of to try and consolidate from within, and then we'll build out from there. Where do we think, as a group, this market's going to go in the next 6 months? If you could look into a crystal ball and look 6 months down the line, where do you think we'd be? Can I start with you on that, James, from a consolidation perspective?
Sure. I mean, I think that, as you were saying earlier, Steve, we've been surprised by the pace of things quite recently. I think a year ago, it felt like it would be a lot more orderly than it has, and there's been some businesses encountering difficulty, primarily from a financing perspective. I think what that's going to lead to is a few more situations like that in the months to come. I think from an investor perspective, there's a bit of a flight to quality, and by quality I mean the most experienced operators in the market, the ones that are performing well, that have shown they can scale in delivery. And I guess almost most importantly, have shown they can get customers on their network. And I think that's what you were saying earlier, is we had the sort of land grab phase that focused on homes passed. And now what we're seeing is a focus on revenue and homes connected. And that's driven not just by equity investors, but by bank debt, which needs to be paid back.
Jayne, can I come to you next?
Yeah, I think I would echo those remarks. And Steve, in your opening address, sitting here today, the financing market is a lot more challenging, both from a debt and equity perspective than it was 12, 24 months ago. And I think potentially both investors and management teams underestimated the operational and executional challenges, taking businesses from what can be different sizes, so some on the much more smaller startup end, needing to get the boots out on the ground, and now needing to actually convert customers. I think some of those operational challenges were underestimated, and so now the phase that we're in is, okay, we had really great business plans, we had great pipelines, and now we actually need to be able to see the proof of concept and that we can actually achieve those business plans. And I think that's where we are starting to see some of those challenges come to light. And so coupled with, at the same time, obviously interest rates and inflation has massively moved over the last 12, 24 months. And so those two, I think, are combining somewhat at an unhelpful point, but also that does create opportunities. James, you alluded to, I think, though, that there will be deals that will get done, but the bar is higher versus maybe 12 months ago. And so that importance of being able to show not just that you can build fibre, but I think even more critical now that you can actually convert and penetrate and get customers onto the network. The two sides of the coin have to go hand in hand, because ultimately if we don't get those customers onto the network, that's the revenue and that's the forward looking of are these businesses going to be able to get from EBITDA negative as you're rolling out CapEx to actually EBITDA positive in the next kind of 12, 24 month time frame.
Rajesh, from your seat, what are you seeing?
Perhaps I can give a wider perspective on consolidation, outlook, supplementing what Jayne and James have said. As you say, we're seeing early signs of that with Fern, etc. I think we can look back at the cable industry in the early 90s and how that consolidated and draw some parallels from that. At that time, you had lots of, local subscale operators, and then we saw lots of M&A activity, which led to Virgin Media. So my view, not top down or bottom up or middle out, more hunter and hunted. I think we'll see some early acquisitions where balance sheet considerations would be a key factor, and we've already seen some of that. I think then we'll see some thread of targeted acquisition. Contiguous network, for example, is a big synergy case. So, watch out for your neighbor. Then I think potentially in parallel or at the end, we'll see some mega mergers. And those mega mergers will be the people who are doing like tens or hundreds of thousands of houses per month and then coming to the party. And I think that's how it could play out. So 4 or 5 years' time, you'll have a more steady state. The Spanish model is really interesting. If you look at the Spanish market, it's about 5 years ahead of the UK, driven by Telefonica and its big push to full fibre to the home. And there you've got like 4 or 5 major players and then lots of kind of rural operators. So that could be a good indicator of what the end state looks like.
Thank you. I'll come on to
Sorry,
you
one
too
more
in a second.
comment,
Sorry.
if I may.
Yes, you may.
It's a dynamic space, lots of opportunity for people in this room. It's easy to go Dickensian on it, but let's be upbeat about it. Connectivity is as essential as water in many ways, right? Just keep that in mind.
Exactly. So the two guys at the end, I'll come to you in a second. I'm just going to introduce another question and you'll have the opportunity to speak first on that. So fibre infrastructure has come under greater scrutiny in 2023. What are the key areas that consolidators or investors should consider when analysing the strength of a network? There's 2 parts to that question, the sectoral analysis, and I think we've kind of covered that, and then the technical analysis. So perhaps you guys can talk a bit about consolidation from a technical perspective.
Sure. I think, as you said, the change in the investment landscape, a lot of people maybe not getting a round of funding they were expecting to get, the investors looking at homes connected rather than homes passed. You see a real change in the approach that our customers are taking, and as you move from homes passed to homes connected, you start finding issues in the network that you maybe didn't know were there. Even if you're not looking to be acquired or looking to acquire, they're starting to consider those metrics more and more. How do you make sure that you're putting quality into the ground? I think from a pure investment or an equity perspective, it's probably going to be more metrics, homes connected and EBITDA and things like that you'll look at. But if you're an altnet looking to acquire another altnet, it's how do you integrate those two networks together? What have they done? How have they gone about their build? how do they ensure that they have that quality in the network so that when you come to take that wonderful homes passed metric and convert that to homes connected, that you don't end up in negative equity with the amount of repairs that you have to do and fixes in that network, that they haven't necessarily just gone with the cheapest fibre in the ground that will degrade it in less than 10 years. So, I mean, again, if you look at an infrastructure, you look at rural networks because you'll have a longer ROI you're looking at, but if you've gone with cheap fibre in that ground, you won't get that ROI because you'll have to start replacing that during that period. So those kind of considerations as to how a network provider has gone about that build and how they've managed to make sure that when they do connect the customer, it will work and they will deliver that service and they won't lose that customer then to a more congested market and to another player.
John, anything to add?
Yeah, I agree, and I think to answer the first question, actually, the rural market is quite interesting to us because there's no overbuild there in the majority of areas. So, like,
Well, not yet.
not yet, but so as an investor, you'd be looking at that and say, well, they're the only incumbent in that area. So there's another part of that. One of our clients that's in the room today, that they've been heavy on their brand as well as what they're building, so that they have an awareness within the local community, so they've got the opportunity to actually connect people, not just so they've got that ROI whilst they're in their sort of capex building phase. And I think that's really important for the rural ISPs to actually consider how those two marry up and how they can take that forward. Going on to Daniel's point about the test and measure, so that's where sort of we sit after you've been through that process and test and measure your network. If you find any issues or gaps or potential issues with quality, that's where we come in as a sort of supply chain consultant. We will look at that sort of health check of your network. How can you update the material specification on your network or in your build, and how you can rectify some of those potential issues without having to just basically bin it all that's in the ground, and where's the value in what you've done and how can you build value into the future. So again, one of those things for us is there's the potential as you acquire a network, you might be acquiring a network that you are then vendor locked from in terms of active equipment. So the passive infrastructure may well be easily compatible, but you may be vendor locked. So how do you get out of that in the longer term as you merge those two businesses?
And Steve, I suspect also from a strategic purpose, in the last kind of 12, 24 months, a bit of the land grab, okay, build as fast as you can. And I think we all know it's not just in the fibre industry, but in infrastructure more broadly, you can build quickly, but that often can mean quality can slip or can be, you cut corners because you have a strategic intent to do something. And now we're kind of going to the other end of the spectrum. If you actually say, okay, we need to make sure we can actually connect customers technically, or if we want to start integrating and acquiring networks, what are the quality of the network? And so as much as possible, I think there's a little bit of some teething issues that are probably going to come to fruition about what is the quality in some areas, because we have this race to, okay, build really, really quickly. But how can we make sure, you're building really well that first time? Because otherwise you say it will cost you down the line when you find out, okay, you've done some technical due diligence and there's some issues that have been flagged from a network quality perspective as well. I think as the industry is going through a bit of that change.
And people are not always looking at, they should start learning from each other, learn from each other's mistakes, right? It's a nice shared community. Learn from each other's mistakes and get it right together, because it's important that we get the infrastructure right, and it's important that people get a quality of service. You look at certain large tier 1 incumbents that do 1 million homes passed running at a million miles an hour, 30% failure rates on homes connected. That's 300,000 customers. They go out, connect up, can't connect it, doesn't work, fiber's not right, wrong light, low light, whatever the problem is. And if you think the cost of that truck roll to go and connect the customer up, and then you have to go back again 3 days later, and you let the customers take a day off work to be there for you to come in and plug it all in, and it doesn't work, they're already not happy. 2 truck rolls to that customer premises, you're 24 months before you get a return on that customer. They're paying £30 a month or whatever they're paying for their service, and it's cost you £600-700 to connect them because you had to go back and back because you didn't build it right the first time, or you built it 6 months ago. and then didn't come back and look at it. So all those homes passed. How long ago were they passed? And how valid is the results from that pass? Is that fibre still working? Is it still ready?
I think it's also worth picking up something else that John said, which is about your route to market. So we're talking a lot about the quality of the infrastructure that you build. But as an altnet, particularly rural, you're very visible when you're building the infrastructure, but once it's in the ground, how are you going to commercialise it? And that route to market, either you're a wholesaler and you rely on getting an ISP who's going to do that for you, or you build your own ISP. And that's something that, I mean, it's been very important in a couple of businesses that we've invested in, have really focused on that. It helps to be local, and having a brand that people actually want to buy has been very powerful.
Yeah. And those rural ISPs are obviously also creating the potential for sort of long-term sustainable jobs within those areas, and that then becomes you forming a community brand, not just a commercial brand, and I think that's really important for those rural ISPs.
And it can help from a social license perspective when you're actually coming through and build, if you're doing a good job, because you do have a bit of, you do have a disruption and an impact on the local community. But if you're coming through and building, that's the way you can actually also get customers. And I think, that is, we're at that point of it's crucial to get customers connected.
But I think we've covered rural versus urban pretty well, actually. What about you touched on retail versus wholesale, James? What's your view on how that's going to roll out over the next few months? Are we going to be a more retail-focused sector? Are we going to have lots of wholesale players jumping on board? How's it going to work?
Well, I mean, at the moment, the wholesale market in the UK is basically just Openreach and then City Fibre in isolated areas. And I think the key blocker on wholesale more broadly has been the price that ISPs are willing to pay, particularly in the rural and less competed areas. Now, I think until that changes, I think for many of the rural players, they will be happy to go on penetrating their networks and taking that margin. And some of the recent, I guess, market developments have helped that. Equinox 2 has cut the wholesale price, but at the same time, all the large leading ISPs are increasing their headline retail prices. So that enables you as a rural altnet to follow that if you need to, or undercut if you want to get customers. So where we are today, we don't see that changing particularly quickly. But I think it comes back to the point I made about the importance of, if you're reliant on selling your network in rural areas, why is someone going to buy that from you? And it again comes back to this point about community, brand, and meaning something to the community.
Rajesh, anything to add on that?
I think from an investor perspective, there's lots of numbers you could look at, and we've got two amazing investors here. But to me, it boils down to the returns, the cash flow, and you talked about the take-up theme and the focus. It boils down to the pricing, boils down to the number of customers, and it boils down to the build cost versus the OpEx. On the pricing, James, you referred to it. There's some movement now, and there's inflationary pricing pressures come through, but it's really hard to make a difference on that. For me, the natural lever there is the product mix. Obviously, for higher bandwidths, you pay more. So when you're looking at assets, is that mix managed effectively? Sometimes it depends on the demographic you're serving, obviously, but do we have a higher ability to drive some pricing through product mix? On homes passed, I think there's lots of analysis around take-up curves, lots of consulting spend on that, but we probably haven't thought enough around disruptions. If people are going out of business, how does that affect the market? HFC upgrades, how is that really going to change the dynamics around customer take-up? And then on cost, it's an area we're seeing increased kind of focus on now. For us, strategic cost management, though, is an opportunity to make the cost base digital. And if you do that, actually, you get cost reduction plus revenue growth as a result. So that's things like AI, omni-channel, analytics, in terms of how you run the business.
Thank you. Let's move on to the subject of mergers. You made an interesting point on our call the other day, which I'll let you make to the audience in a second. Lots of large, well-funded businesses out there. Are we looking at a future where mergers rather than acquisitions, I know you think they're the same thing, become the norm? And how do you think that's going to happen? Are some of the urban players going to go and buy some strong rural assets? Or will the rural assets combine to create a larger rural asset? Where do we think the market's going to go? And James, if you don't mind kicking off on that one as well.
I'm trying to remember,
I'll bring you two guys in on this one, I promise.
trying to remember what I said on the call. Hopefully we'll say that. But I think in the short term we will see more acquisitions than mergers. I think what I said previously, that in most mergers there's normally actually an acquirer. I mean, it's a way of combining companies in a cashless way. I don't have any knowledge of the larger situations that you've referred to that may or may not be being discussed at the moment, but I can see that there are consolidators emerging in the altnet space. The ones that have been around for a long time, the ones that are succeeding, they've got their operations sorted, they're delivering, they're adding customers. Once you've got that there, you've got almost the right to be an acquirer. And so I think that's what we're going to see over the next few months. And then in time, I agree with the sentiment about mergers of rural players. I think the business model of urban versus rural is so different in the sense, in a rural area, you've got high CPP, you've potentially got a subsidy, you've got potentially unique network, you've got an increased likelihood of being a wholesaler from that perspective in time. Versus urban, you've got a low CPP, much lower penetration, much more competitive environment, and it's quite different investors attracted to those two different profiles. Infrastructure investors, sort of pension funds, insurance companies, are used to investing in monopoly type assets. So, an electricity company where it's the only one, an airport where it's Heathrow, where it's never going to be replicated. But they like the idea of investing in the only network. So you could see them getting behind a rural consolidation story. And then at the same time, in the urban sector, there's a lot of reason for consolidation there too.
John?
Yeah, on the rural space, I think that there's the potential for not just sort of fiscal mergers. I think there's strategic and commercial mergers. For instance, say like Waldenet and Oggy, for instance. They're very much in areas of the country where they've got very strong sort of identity. And they're not going to be overbuilding each other, they've not got necessary ambitions towards each other, but they could, from a commercial and strategic point of view, they could merge in that way and see the synergies between those sorts of businesses. We're in the process of seeing how this could actually play out with the firm group. We've got a test case there with them. They've gone down a route of creating a Vitrify model to look at their sort of back end and software consolidation of how to merge those networks. Maybe that's the blueprint that we see with others. We'll see, but we know we've worked with three of the businesses within the group. They do have different delivery models in terms of the material that they've used to roll that out. So it'll be interesting to see again how that is from a technology point is consolidated. I think there will be a number of changes, probably whether it's at the OLT level, for instance, where they're going to have to look at how that technology is conducive with switching essentially between each other. And then once it's switched as well, we've got that as a software option between the brand. But there could potentially be issues with the active equipment on that. So again, if we have this conversation in a year, it's going to be a very different conversation.
Sure. Daniel, anything to add?
Yeah, I think consolidation, mergers, acquisitions, we'll definitely see it, but we'll also see a lot more managed services, I think, in this market. I think if you may be not getting the investment you were expecting, you're now trying to generate revenue, you've got to be a bit wiser with your OPEX. Do you need to have your own procurement function, or do you go work with somebody like the Altnets and have a central procurement function? Several operators now having network operations as a managed service, so you can have one organisation managing several networks and doing the network operations, some of the support, some of the distribution, logistics, all these kind of things being more driven through managed services. And I think you'll see that then focus that allows the network providers to focus on the build and the build quality and the customers and getting those customers connected, and allow those other things to to just be outsourced.
Jayne?
I think everyone's touched on a few points that possibly say that consolidation will definitely happen, but it might not be super straightforward. There will be commercial and there will be technical challenges. I think that there will be, therefore, a combination. There might be instances where it commercially or technically makes sense for more network asset purchase acquisition, or there might be reasons where it makes sense from an operational synergy business, maybe even funding perspective for more a merger. It'll depend on, I guess, what each altnet is looking for, what they've already created themselves, even from a systems, from a people perspective, from a brand recognition perspective, as to whether it makes sense. You're more just looking for an asset acquisition versus potentially merger of businesses.
What becomes more important though? Is it the asset in the ground, or is it the customer base? You know, what's the reason for that actual merger or acquisition? Do you need the network footprint to go and roll your own ISP out, or are you trying to buy the customer footprint they've got? I mean, you mentioned a large one that's in the papers all the time at the beginning of the discussion, and there's a strong argument to say that the acquirer is maybe not that interested in the actual network. It's more interested in the contract they have with a large ISP, and they want to buy those customers. So there's kind of different reasons for that acquisition, and that'll have different considerations as well.
I'll move on to the next question, and I'll kick off with you on this one,
Okay.
Rajesh, if you don't mind. So,
Sure.
in the current economic climate, financial stability seems to be a question that is being asked of ISPs more
Yeah.
often. We're being held accountable for the money we spend. What are the key indicators of health in an ISP model, do you think?
Yeah, so investors are very reasonable people. They just want hyper growth and leading profitability at the same time. Yeah, tomorrow. And we've all experienced that. So there's obviously a slew of kind of strategic, financial, operational kind of metrics you can look at and rattle through those. So there's the homes passed and how they really are, the penetration rate, what's happening with that. RFS is interesting, right? There's different definitions around that, and what's really happening with that gives you an idea of operational agility, churn up, et cetera, et cetera. And like you can slice and dice those to your heart's content. I think a couple of points. First of all, it's about health, but I think we need to keep a balanced view. We also need to keep a view on potential of any business. It's easy to kind of just start getting a bit narrow-minded about this. So with that, I think some other considerations would be if you're looking at the health of a business, the momentum in the business. So what's the trend on some of those metrics I referred to? Is this a business that's just spending money trading water, getting a few hundred customers, or is it really landing, revenue generating customers? Another would be the clarity of the C-suite and how that translates into operational considerations and the actual operating model. There's engineering-led firms, for example, or there are a lot of firms who believe that customer focus actually is a key thing, and that will trump a lot of the other kind of things we've been talking about, right? Is that embedded in the way the organization works? Another one could be around, the protection that you have for your network coverage. Is there a natural moat there? Rural, for example. Though obviously the economics of rural are different given the densities, etc. So I think, in addition to the slew of metrics, and of course KPMG can help with all of that, there's the wider consideration. And to me, I think, the other kind of ultimate test, and there's a lot of desk stuff going on this, but it's the target addressable market, right? How is that actually defined? What is it really? And beyond the kind of PowerPoint, is that true on the ground? And then what's your kind of view of fair market share of that? And is that really being achieved through the sales force? I think if you think of all those considerations, it'll give you a more holistic approach on the health and potential of the business.
And James, you've got a number of assets from your portfolio. What's a good sign that you look for in those assets? keeps you happy,
Well, I think
doesn't keep you awake at night.
I think Rajesh has picked up all of those different indicators. I think on a monthly basis, if you're in build, you're looking for that you have passed homes and that they are ready for service, and the gap between homes passed and ready for service is narrowing rather than widening, except in the fact there need to be good quality homes. I think then there's, are you adding customers to it? And the analysis of the older cohorts and looking at the take-up rates is totally indicative of whether it's working. Like, is your brand working, or is a wholesale strategy working? If it's working, you are adding customers, and it's amazing how steady the growth is when you look at some of those curves. And if you've got cohorts that are going wrong, why is that? What can you do about that? I think the other bit we haven't mentioned is price. Obviously, you've got customers times price equals your revenue line. And price is something that's to an extent dictated by the market in this country. And you can obviously focus on, as you were saying earlier, which products that you're selling to maximise your ARPU. Ultimately, it's about revenue and then a sensible cost base for that revenue. And again, a lot of businesses in the sector have grown very fast over the past few years, and people have grown fast. In some cases, people have grown too fast. That's too much cost. And I think coming back to this point, capital scarce. A good business is lean. It knows how it's going to get from revenue. It's not EBITDA positive to EBITDA positive when that's going to happen, and that's a focus.
Jayne, anything to that?
Yeah, I think definitely at the moment we possibly have gone very much one way to a quite a short term focus on some of the targets because of the challenging financing market. And so I do often see ourselves even, balancing, okay, the short-term targets, but really eye on the bigger prize of the long term and the underlying investment and economic thesis still being there. So I think it is particularly on the customer side, is probably looking at some more of the kind of leading indicators as opposed to just, okay, well, what happened last week or this week with sales? How are we looking from a pre-sale lead generation point of view? How is that sales pipeline looking? Is it continuing to grow, or are you starting to see it reduce, and what's maybe causing that potential reduction? I think the customer and the sales area is definitely an area as an industry we can come together to keep selling and educating the community on the benefits. COVID definitely helped us because everyone was forced to be at home and really realised, okay, how reliant are we on digital connectivity as an essential service now? But I think as an industry we've got to keep educating that, because that customer conversion, I think there's definitely some notable exceptions, but I think sales has probably been more sluggish. And so as an industry, how can we come together to keep educating and communicating that, and that will definitely benefit all Altnets together.
I think it's time to open up for questions. So have we got floating microphones around? Are there any questions? Stick your hand up and one of our people will find you. One down the front here.
Hi, my name is Andrew Camping. My company is 419 Consulting. I agreed with the comment that James made that there's no such thing as a merger. It's just an acquisition where one of the parties doesn't know it yet. Two quick questions. Are the networks and systems that the companies are building, the Altnets are building, are they building them with a view to future integration, or are they just risking having a bit of glass to sell when they're bought? And then I suppose the other question, the industry is really engineering-led at the moment. Do the current leadership teams have the ability to transition into a marketing-led culture, or do the investors need to force new leadership teams in that can make that transition? Because currently what they're selling as a product is a feature. It's not a capability. It's not benefit-led at all. So as the industry matures, do they need a whole new leadership team to make that transition?
Dan, do you want to cover the first question?
Yeah, I think I see a mixed real mixed bag out there when I speak to Altnets. There are some that are really interested to know what we do with the likes of OpenReach or Virgin Media, and they are building with a view how easily they could potentially be integrated, or how easily they could then integrate something with a similar network quality into their network, so that they're looking at it from both sides. And then there's others that, my humble opinion, they just, are just organically growing the way that they see fit and innovating where they want to innovate and doing things a bit differently, which is great for an organic growth kind of business plan, but does create some risk around what happens if you get a capital risk and something has to happen, how easily you can be integrated, because your value is then determined, I guess, by what you have, how many customers you have, but then what's the cost of integrating that in as part of that merger.
And on your second question, the leadership one, I'll make a small comment on that, and then maybe I'll hand to James and Jayne. But Voneus is a great example. It's a business that grew very quickly, and under my stewardship as CEO, until we got to the point where I just thought, right, I'm out of my comfort zone now. The company needs to scale up at C-suite level to prepare it for that next phase of its growth and development, and to sustain the business. So we worked very hard with Macquarie to bring in a very professional C-suite, all with blue chip experience, to help the company transition to that next phase. Anything you want to add to that, Jayne?
Yeah, and I think having that balanced C-suite of the engineering and the sales is vitally important now more than ever.
James?
I think that's true. I mean, when you're in the water, in the desert phase of rural build, it doesn't matter, because you're going to get customers just because of the product at first. You're right. As businesses scale, they need a different skill set. I think in the C-suite, I'll also be looking for a CEO that's a leader of people, whether they come from engineering or a more commercial sales focus. The CEO needs to lead and pull the right people into his or her team for those different roles. And I agree, actually commercializing it requires a different skill set than building it.
Can I just add? I mean, I've met some companies, I wouldn't take names, but where actually it's not as exactly the way you portray. And actually, I've seen they feel it in the stomach that the customer focus is critical to long-term benefits of the company. So I wouldn't say it's characterized as a. There are a lot of engineering-led companies, but it's not as bad as that.
Next question.
Thank you. Hi there, Dean Buckley. I haven't heard any mention at all of business-to-business or enterprise customers, perhaps relationships with municipalities and other local authorities. Does any of that factor in to consolidation, or is it purely going to be on residential, homes, parcels connected?
Would you like to take that?
Okay.
Rajesh?
Yeah, sure. Obviously, you can anchor performance through wholesale and community contracts. I think the focus, when you look at the relative materiality of those revenues, it's not that significant right now. So I think it'd still be kind of more of a B2C focus. A lot of the business model is like we're building the B2C network, and if we pass the fish and chip shop, we'll connect that as a B2B customer. I see the grimace there, a bit provocative for intent, but I'm a big believer in that space, so I'd like to see more focus in that space.
Yeah, I guess we're here talking about ISPs, and we're talking about consumers, like access networks. I think that's probably why that topic hasn't been mentioned. And Neos Networks is one of the main wholesale B2B businesses in the UK, but it's a very different proposition from this. In the sense they're selling very high capacity circuits to specialist users. They're not selling to fish and chip shops. They're selling wholesale. then that answers your question. If there's anything more specific.
Well, I think equally there's the urban versus rural argument. Okay, so when you're building rurally, and Voneus only builds rurally, you occasionally come across a small industrial park that used to be a farm that needs connectivity with maybe 10 or 12 businesses in it. So you just connect those up as B2B customers. Clearly, if you're building in urban areas, you've got buildings like this that require the connectivity. But those are far more competitive environments, and as James said, that's probably a wholesale-led decision or solution. Anyone else have any insights?
I mean, probably from a rural perspective in terms of social license in working with the local authorities, the municipalities, working with community groups. If there's a village hall, I think that's part of the story of getting towns and villages on board. So I would be very disappointed if we learnt, we'd missed that. I think that's actually, it's possibly part of, from a strategic perspective, actually going in and offering some services, and from a sort of not-for-profit perspective as well, when you go into some rural villages.
Agreed. Any other questions? Lots of them, so. Okay.
That's better. I had a lot of, you're talking about build.
Sorry, can you tell us who you are, please?
Oh, sorry, Martin from ENS Digital Transformation.
Thank you.
Sorry. I heard a lot, you've mentioned quite a bit about homes passed and ready for service, etc. We work with quite a few sort of like Altnets in varying degrees of take-up, etc. And I just wonder, maybe as a as an investor, what sort of like minimum, what do you think the sort of minimum take-up rate should be? Why is there different rates between different Altnets and the factors behind those, etc.?
We've got two investors up here.
One difference will be driven from, I guess, rural versus urban. And then I think there's a lot of consultancy power that goes into looking at penetration curves and how long we think it will take to penetrate different, when I guess you've got some other existing copper products there. So there's a fair bit of maths and numbers sitting behind it.
30% is always the magic number.
That's a good number to get to. Yeah, I mean, I think there's a difference from a rural versus urban as well, and from a competition perspective as well.
And there's actually a difference between debt and equity. Because if your business is supported by a debt package, then there will maybe net debt versus RFS calculations, and then penetration around the RFS that are conditional upon continuing to receive that debt. So you've got two different sets of parameters depending on who's put the cash into the organisation. James?
Yeah, I don't have much to add really, but it all depends on your endpoint, doesn't it? If you're building in deep rural and that's going to be the only fibre network ever, there will be a percentage of customers you assume take that fibre connection. Beyond a certain level, no one will ever overbuild it. So it depends on your beliefs about Starlink or some of the fixed wireless product. But you've got that end goal, and then there's the curve, there's the rate at which you get there. So if you're saying you're going to get to 60 or 70% penetration in 7 years, if after 3 years you're at 5%, you'd say that's rubbish. You'd expect it to be quite steady, and we certainly expect to get to a decent level in year one, because you've been very visible to some of Jane's points about working with the community. If you've done that right on the way through, you've got a decent take up.
Just from a technology point, just to add to that. So a lot of rural builders will be doing their own POPs or active capital because there is no BT footprint. When you're talking about sort of ready for service in sort of more urban areas, with the BT exchange exit program that's going on, as an investor, are you looking at companies and their strategy for replacing that loss of the exchange in the future, or is it just a that's what they've got ready for service now, and there's sort of no plan in the future. That comes into it as well.
Sounds like if we're not, we
Yeah,
definitely
yeah.
should be.
Because the rural builders are actually having to build that sort of point.
Correct. Yeah. So with Voneus, we actually.
Yeah,
Yeah.
and they're
Which is one
And
of
then
the
a fair bit
reasons
of
it's much more
can we
expensive.
build with can we build with light as well? So we test it and go with.
You're not allowed to ask questions, by the way. You're up here.
Hi, Paddy Grayson from Wildernet. You said that pricing is market-driven. Do you mean market-driven by the incumbent, or do you mean by each individual altnet? How do you see pricing? Is it different in different areas? What's your experience?
So I think it's a critical topic. The telecoms industry has kind of trained the consumer so that we give away technological innovation in the hope of market share gain. We know that consumers don't pay for technology per se. If we look at the output trends long term, they've been largely static. So I think we've come to a situation where it's very hard to drive pricing changes or massive increases in services and connectivity. And that's the kind of sticking point, to put it politely, in terms of how we can, I don't think there's an easy answer as to how you change that dynamic.
Oh, I was here for the easy answers.
I think I made the comment about market driven. I think my point is that the broadband market in the UK is still controlled by a handful of companies who seem to raise their prices in almost in sync with each other. We've obviously got the contractual price rises, the 3.9 or 4% plus inflation, then been put through over the last 2 or 3 years. So the comment about market driven really comes from that. They are powerful national advertisers. They put numbers in people's head about what you should be paying for your broadband. Most people do go on some sort of price comparison site to look at what they're paying versus what they think they should be paying. So that's really where that comment came from for me. Obviously, as an altnet, you can choose to follow that, or in many cases, you choose to lead from a price perspective as a way to get penetration onto your network. I think the other thing that you were alluding to is about rural versus urban. If you have got the only fibre network in a rural area, you've got a certain number of people who need that fibre network, so you probably have got an element of pricing power there. If you're in an urban area and you're competing against another fibre another fibre business, then you don't have that advantage. You probably have a disadvantage because you're up against nationwide brands.
Yeah, and there's a panel later that covers that take-up and customer education point. But actually, I think if you're a rural player like you are and like we are, if you believe in your model and you don't really have any real or latent competition, then why race to the bottom on price? Okay? You've got to educate the public on what's real fibre and what's fake fibre, obviously, as a part of that process. But we've tried to stay as rigid as we can with our pricing structure. It's not expensive, but it's not as cheap as you can hear on the radio. 20, 25 quid for full fibre, which isn't really full fibre. So we'll cover that in a panel later on, but I'm completely in line with you on the question.
We better get you on radio with that tagline.
Anytime, Jayne. Any other question? I think we've got, how are we doing time, Andrew? We've got one more? Right, okay. Time for more than one. I'll come to you next.
Yes, it's James Greenwald from KPMG. I just had a quick question in relation to how you might see valuation multiples playing out in the market.
Isn't that your job? Look, from our perspective, you've got, I guess you come from an environment of businesses have been sold on the basis of growth plans, and so multiples of EBITDA have been meaningless and it's really to the point Rajesh was making earlier about why you're going to build that, and why you're going to get a share of that market, and you can derive an enterprise value like a price per home passed, and people do look at that multiple. I think that's come down because investors are much more sceptical about growth plans. That's because there's a lot more altnets than there were a few years ago. I think at the bottom end of it is what it costs to build. And I think that's the bound of it. At the moment, EBITDA multiples are kind of meaningless when there's no EBITDA. But people do try and look at a synthetic multiple in that if you get to your fair market share from a penetration perspective, that would derive an EBITDA. What would be the multiple of that?
And there's potentially, again, looking at rural versus urban. In rural, if you've got decent penetration and no real threat of immediate competition, there's potentially a lifetime value of a customer you could attach to that as part of a valuation metric. In urban, where you're in a really competitive environment, it's probably much more difficult to calculate what the lifetime value of a customer is, because they're not likely to be a lifetime customer. So I mean, that's one way of looking at it versus urban versus rural. Rajesh, Jayne, any other comments?
I think the other element is starting to look more and more towards when capex and build does finish or needs to turn off. How is the underlying cost base of the business from an OPEX perspective and from an EBITDA, and that line of sight to EBITDA positive, I think is coming to fruition possibly sooner than had been expected.
Rajesh?
No,
Answer your colleague.
Did you plant the question?
No. No, I've got nothing to add. I think it's all been covered.
There's a question down the front here. The chap's had his hand up several times. Right down here. Thank you.
Hi there, Graham Sullivan from Ogilvy Box Broadband. So, having lived the last 5 years with BDUK, there's been quite a lot of change to the subsidy programs. Get your house and type A, B and C procurements and the time that it takes to get involved in all of those. How much impact do you think those changes to the subsidy program have had on the smaller players and the rural builders, and what's happening to the market at the moment?
Well, I think we have seen that it has had an impact, especially with some recent ones that have made it into the news. I think now is the time that it's fundamentally critical that government organisations like BDUK still continue to back and support, particularly the Altnets, at this critical time. I think vouchers and the different programs there, we definitely from an investor perspective and in the rural space take those into consideration and very much watching that the availability of those continue to be there, and then on our side making sure that we deliver against those vouchers that have been secured. So I think it's a critical part of the jigsaw and a very important time for that to remain supporting for Altnets.
And clarity is the word I would use, Graham, right? Because there have been a number of shifts and changes in public procurement schemes and voucher schemes over the last 2, 3, 4 years. Some of which appear to be a kind of suck it and see approach from BDUK. Let's make this tweak. The most recent tweak saw fewer voucher eligible properties, but with each one being worth more as a single entity. That clearly isn't working for BDUK, and we've got BDUK representatives here at the panel this afternoon, so we'll do a bit more digging around that. But Jayne's absolutely right. If you're a rural player, then those subsidies can identify or help to identify the areas that you're planning to build next. Because rural building is very expensive, and anything you can get your hands on to offset some of those costs is a real bonus for businesses like ours.
So I guess the follow-up to that is the type A procurements and the type B procurements are very long-winded, and they take up a lot of time and resource, and you're bidding against others. So I mean, is it working? Is it worth going after them? It's just such a complex process of mapping and pricing. determine?
It's an administrative nightmare, okay? And I think if you're a business the size of Voneus, despite the fact it's a solid, well-funded business, we'd be adding several £100,000 a year to our salary bill to chase a prize that we may never win. So we took a decision a while ago within Voneus that we wouldn't bid for the wider public procurement programs because of the horrendous cost associated with the bid and the fact that you had no guarantee of success. At least with vouchers, you get some guarantee of success. Once the property is on your voucher eligible list and you go and connect, you know you're going to get that cash. The larger companies who've got the resource already and have to be able to follow those bids and approach those bids and bid for those lots, they probably welcome that. But certainly from an Altnet perspective, it was a step too far for us administratively and financially.
It's also about relevance of the lots in the sense that to those points it takes a lot to scale up and actually make a bid like that. We've got one of our investments, Fibrous. It started by winning a number of these procurements in Northern Ireland and has taken that skill set to the UK market, focusing on the north on some quite interesting contracts there. Another business that Graham's very familiar with has been focused on a different area where we would have needed to scale up a lot to bid for a contract, which decreased in size to a scale that wasn't particularly relevant. And I think that's been one of the challenges that BDUK have had, is that they've had lots of people when they go out to do a market review saying, right, we're going to build here. And so they look at a particular premise and they might think that there are 3 or 4 people going to build that. So they've reduced the scope of some of these tenders. So you end up looking at it and thinking, well, that's actually, it's not worth scaling up to bid for that. It needs to be more. I think some of the requirements around sort of the financial tests have also been quite hard for some of the smaller operators, where if you've got a regionally focused builder, it would make sense for them to find a way to meet those tests and build over time, even if they're going to not meet those challenges right now. So I think it's been difficult, but we've seen some real progress recently in some areas.
John, anything to add?
No, I mean,
No questions.
The procurement of the voucher side of it, we don't get involved in, but once they've actually won the voucher, attaining the, specifically the ESG side of the funding requirement, that's where we get involved with our clients and how we achieve that. So the actual procurement of the voucher, no, but
We've got time for one more question.
Hi there, it's Richard Watts, VX Fiber. Before my question, just a quick pick-up on the subject that Dean raised earlier about municipalities. Don't underestimate the significance of municipalities. It's not just about the chip shop. It's actually about, maybe 600-700 CCTV cameras, schools, hospitals. Everything can be connected on your access network. So it's all revenue, and it's very significant and pleasing from an investment point of view. But my question is that we've been talking about mergers, acquisitions and investment from an operator perspective, but there seems to be quite a lot of activity at the investment funding level of debt swapping out, equity swapping out. So really a question for Jayne and James about that sort of dynamic of consolidation within the investment community.
Sorry, I just want to clarify. Agree 100% that those kind of contracts can anchor the network build, and then you can then address additional demand as a result of that. So just want to clarify that.
I think a good example in Stoke, we've connected 550 UV cameras. There's a lot of ducting. There's also local authority that you can access. The partnership relationship, more than just an anchor tenancy, the partnership relationship with local authorities can be really significant in the long term.
yeah, and just on that point, so Altnets, who we work with, they do a lot of that work. They're reaching out into communities that have been connected by BT. They will be picking up businesses and the CCTV, bus shelters, all that sort of stuff as they go. So yeah, I think it's happening. It's probably just not on the agenda for more of the urban builders because there's already the infrastructure there. So it's certainly happening for the more rural builders.
Okay, James. think the question was directed at you initially.
Yeah, I'm not sure I understood the question exactly properly, but you're talking about the funding level and
Yeah, you've seen some of the debt recently being swapped out, so people raising debt that's actually been paying off previous debt, or you've seen the acquisition of, I mean, even in our business, AMP, you've had Digital Bridge take an acquisition of part of that AMP fund. So it's actually a consolidation going on actually in the investment and pension community, and I'm interested in your view.
yeah. I think with the exception of that transaction, I don't think there's been much in the sort of investment fund community. I think the swapping out of debt and equity, ultimately these businesses at an earlier stage have only been able to support equity. As they've increased maturity, you brought in debt to support that. I think what you've seen over the last few months is a lot less debt in the market and much more expensive debt in the market. So whereas you might be borrowing at swap rates plus 3% 18 months ago, right now you're going to be looking at swap rates which are up 4 or 5% plus a margin of 5%. So suddenly the cost of debt isn't far off what the cost of equity was 18 months ago. So I think that from an investment fund perspective, the attractiveness of levering up companies has got a lot less, and then the amount of debt they can support, i.e. the amount of interest they'll actually be able to pay, because ultimately debt has to be repaid, means that there's these businesses are going to need more equity. We've announced this morning a very substantial equity raise at GigaClear to carry on supporting that business, for example. So I think there's going to see more of those sort of things.
Thank you.
I think we're at the end of our slot. I'd like to thank all the panellists for joining me up here today. Fantastic, great contribution, guys.